All right, so you are welcome to the class on evidence. So here you're going to talk about audit evidence and how to get those evidence. All right. Now, we all know that the practice of audit is for the auditor to express his opinion. So never forget about the ISA 200, the objective of audit, to gather reasonable assurance that the financial statement in all material respects is free from material misstatements. Then number two is to express your opinion. So your opinion is based on something. Everybody's opinion in life is based on something. Everything is based on something. A Muslim will do whatever he will do because of something, where he is getting his paradigm from. A Christian will say something about a topic or do anything because of his paradigm. Everybody will say one or two things, and they have a basis for saying that. So it is best to look at the base than the outlook. Okay, so that is how it's supposed to be. Now, if an auditor says that the financial statement is true and fair, then on what grounds is he actually saying it is true and fair? Okay, on what grounds? So that is it. That is what you have to look at. And what the grounds based on which he's saying whatever he's saying, whether the financial statement is true and fair or not, is the evidence that he has. I don't know. I'm just joining this class. I saw on one of my platform that the court has ordered the special prosecutor to refund or take away the seization of the properties and the funds of Cecilia Dapa. Yeah, maybe upon all the accusations and everything going on, they've not found evidence of certain things. That is probably the reason why this kind of statement will come out. But there has to be evidence, especially if we're Ghanaian. Anything you say, they say, where is your proof? So you will need evidence. Now, what then is this evidence that we are talking about? So the evidence we are talking about is what or the information obtained by the auditor in arriving at his conclusion. The information. So the evidence, when we say evidence, we are talking about the information. The information obtained by the auditor. All right. During the course of the audit, based on which he makes his conclusion. So you realize that the evidence is what? The information. The evidence is the information. So any information the auditor used to arrive at his conclusion, that is what we are talking about. Now, evidence has two qualities. Two qualities. Now, in audit, we say that to be able to draw a conclusion, the auditor must have what we call sufficient appropriate evidence. He must have sufficient appropriate evidence. So the evidence must be sufficient enough, and it must be appropriate. It must be appropriate. It must be sufficient enough, and it must be appropriate. All right. So sufficient appropriate evidence. Now, when we say something is sufficient, we are talking about the thing in terms of its quantity. Are you satisfied? Was it sufficient? It means the quantum is the quantity of the thing. When we say something is appropriate, then we are looking at what we call what? Quality. 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 So quantity versus what? Quality. And here, quality is explained in terms of what we call relevance and reliability. relevance, and reliability. That is what we mean quality. If there's something is quality, it means that it is relevant. It can make an impact. All right, the information is quality. Is it reliable? Can we depend on it? Or is it concern information? So this is the quality of an evidence. Whatever evidence you are going to get, this is the quality of it. All right, so that is it. Now, let's go back and talk about quantity. Let's go back and talk about quantity. Now, when we talk of quantity, we are talking about the volume, how you get the evidence. And I'm going to give you practical example. Very, very practical. Very, very practical. And we say that normally we say that the sufficiency of a thing is affected by the risk. The risk. So we say that the riskier the item, the more evidence should be obtained for that item. If the thing is risky, then it means you need more evidence. So for example, if you say somebody has slept with somebody's wife, then it means that that information is a very risky information. It can cause damage, and therefore you need more evidence, not just one, more evidence, more evidence. And again, if the thing is also material, then it also means that you need more evidence, more evidence. So quantity is affected by risk and materiality. Of course, there are others, all right, but these are the two main. So the auditor's knowledge and understanding of the business too comes to play, and all those things, they all come to play. But when we say sufficiency, we've already established that you need more information, more. So I'm going to give you an example, and this is practical. If you have been audited in your office before, you realize that this is what the auditors have been doing. So this is not just something theoretical, it's practical. Let me give you an example. When the auditors come into your office, they are coming to audit your financial statement. All right. So most of the time, where they start from is your balance sheet. If you check, always check that thing. You see, they start, give me your PPE schedule, give me this schedule, give me that schedule, give me that schedule. As a matter of fact, internal audit, for example, if I bump into your office, the first thing I will audit is your cash at hand. Yes, maybe that cash you have been misusing it. So if I bump there, I need to know that the cash at hand in your office, physical cash at hand, and the cash at hand in your books should be the same. If it is not the same, then it means you've been stealing money. That is it. So the internal auditor will pick it up. Now, let's do this example. If you are an auditor, let's say you are the auditor, you want to audit the bank item, the bank line in the balance sheet. What will you demand? What will be the evidence, or what are the things
Bank
you look
statement.
at? You look at what? Bank statement.
Bank statement.
So bank statement. I like the way you say bank statement because I'm going to use it to explain something to you. Yes, what else? So bank statement would not be enough. But bank statement is not even the first thing they look at if they want to audit your bank item. That is not the first thing they look at. There's something they demand from you. Anybody with experience? Your cash book, right? That is from the company, right?
Yes.
Yeah, so they will ask for that. As a matter of fact, what they actually ask for is what we call your bank reconciliation statement. Because you might have done bank rec for December. Is that not it? So asking for the cash book that is it. Asking for the cash book. So this one is giving you the outlook of what? The cash book. Now, if they take your cash book, because the cash book is what is in your ledger, and that is what is in your trial balance. Is that okay? That is it. And that is what the auditors have come to meet. So they will say that give us your cash book or your bank rec, you the entity. So this one is provided by who? The accountant or the accounting department. They provide that. You have to provide that to the auditor. But it's not enough. It's not enough. And since it is not enough, the bank will go, the auditor will go to. So if you have been in your office before, you see what we call bank confirmation. You know that thing, that you send an email to the bank to confirm the balance the company has with the bank. Have you witnessed it before?
The certified bank balances.
Exactly. Good. You see, it's practical, so it's not like it's theoretical. The certified bank balances. So that is what this part comes in. They get it from who? The bank. They get it from the bank. So you see that here, the company providing the information is not enough. They need quantity, and therefore they go to the extent of what? Going to the bank for the certified bank balances. Okay, let's take another example. What about receivables and payables? How do you think the auditor can get the correct figure and confirm those things in the balance sheet, the financial statement? Yes. Yes. Anyone?
Purchases and sales ledger.
Yeah, so purchases and sales ledger, in actual sense, what they ask for, if you are in a trading company, they will ask for your aging. I hope you have all heard of aging before, customer and payable aging. Do you know what aging is?
Is it okay? Let's say time given for you to pay
So
or receive.
what you said, the customer ledger, okay? The customer ledger is the same as the aging. So, for example, the agent will list all the customers, all right? It has all the customers in one Excel. It also has the amount, the balance of those customers and those payables, okay? Then it also tells you, like he was explaining, the time, how long that debt has been in place, okay? So under 30 days, under, I think if you are in public sector, you don't normally encounter this because you don't trade. Most of you are in public sector, right? Most of you are accountants in courts, controller, and
Yes,
so you don't really
yes,
see these things. Yeah, but in the private sector activity, you see it a lot. You see it a lot. So there's a ledger called customer ledger. We call it the aging. Okay, so it will give you the customer. So the auditor will ask you for that thing because the aging will show the total of the receivables and the payables, and that aging should be linked, to be able to be linked to what is in the trial balance. You can't have an aging different from the balance in the balance sheet. You can't have that. And this one too is provided by who? The entity. The entity. So just like the bank, the auditor will send a message to your customers and your payables and say, please, for example, if it's a customer or receivable, he said that company A says that you owe him 500,000, confirm. If they say no, then it means that figure that the company is carrying, there's a problem. If they say yes, it's okay. We will come to that. We will come to that thing. Another way is also saying that you send a letter to the customer and tell the customer, kindly state the amount you are owing company A that I am auditing. Now, if the customer states the amount and you compare it to what is in the books of the entity and it is different, then it means there's a problem. Please, are you getting the picture? Hello? Follow me. Are you getting the picture?
Yes.
All right. So that is how it is. The last example that I can give you is your inventory, for example. Your inventory. So like you will say, that one too, you will need inventory ledger. Okay, you will need the inventory ledger. But when you get the inventory ledger, it is not enough. So it is closing balance we are looking at. So you need to get the sign-offs. The sign-offs. So for example, I work in petroleum company. Now, when you need to get your closing stock. So in all the branches of our station, so let's say Total in Ring Road, Total in Bolga, Total in Tamale, Total in Tunyane, all the various stations of Total, you will be sitting in the head office and you need to get your closing balance. And you see, you will have to go with an auditor to confirm those closing balances. It's the most difficult job. And sometimes these things, you are not even able to even go for 31st night service because you need to have the closing stock. And we normally measure the closing stock early in the morning before they start sales on the 1st of January. So you go with the auditor must go with you, read the meter, know the quantity of the petroleum product that is on the ground, because that is the value of the closing stock. You know how much it was bought, you priced it. So the quantity of the fuel down there has to be measured. So that is it. Then you get your closing stock. Then normally in my case, the station manager will sign. The accountant from the office, the head office who is going there will also sign. The independent auditor will also sign. So it is a confirmed closing stock. And that should be the same thing as what is in my trial balance. That is what should be in your trial balance. You can't have the reality different from what is in your books. It's not possible. It's not possible. So that is how you find this one to quantity. You use the ledger and you went out for what? The evidence. So that is it. That is how you get quantity. Now let's come and talk about the appropriateness. Let's talk about the appropriateness. Because we've said that the thing has to be appropriate. And when we say it has to be appropriate, then what we are saying is that it has to be relevant and it has to also be reliable. So those are the terms we use. Now, let me give you an example. Let's look at something. So if you are going to, we are using the bank statement, the bank again. The bank, the same thing. How will we get the quality? How do you think we will get quality? Yes, any ideas on how you think we can get quality evidence? Quality evidence. Yes, any idea?
Document to prove.
Yeah, but I don't know if you are the one who answered. You used the word certified. Was it you?
No.
Somebody said certified bank balances.
I said it.
That's noble, right?
Yes, sir.
Yeah, that is the word. So in terms of quality, we need the certified ones. So here we say you need the original. So original is more reliable than what? Photocopy. Because we want to rely on it. Original versus what? Photocopy. So original is more reliable than what? Photocopy. Because when you want to, so sometimes the auditors want the stamped copy of the bank statement. Stamped copy, original. So original is more reliable than what? Photocopy. Hard copy. Hard copy is also more reliable than soft copy. I hope you agree. You know soft copy can be manipulated. Do you know that? So if you want reliable, or if people don't know soft copy can be manipulated. Guys, talk to me. Talk to me. This is audit class. Talk to me. Do you know the
Yes, we
photocopy
know.
can be manipulated?
Yes, please.
Yes.
Yes,
Even a PDF file can be manipulated.
Yes, please.
Yeah, so If you want reliable evidence, then it means that you should be obtaining hard copy. We are teaching you this because sometimes you people will be auditors. So that's why if you want evidence. And another one that is most interesting. In fact, that one, even me, I've suffered on it before. I've suffered in my work experience on that one before. Yes, something written or documented is more reliable than an oral statement. In fact, if I tell you the trouble I have been through, that in my office, somebody said something, I acted on it. Then the time the issue came, she said she never said that. You clap for me. You clap for me. Unless you what do you call it? You recorded the person's voice. So when it comes to evidence, be very, very, very careful. Be very, very careful. Because the person can tell you that he didn't say that. So if you want evidence, a reliable evidence, don't say hearsay, I heard. You will need a written evidence. So written evidence is more reliable than what? Oral evidence. Please take note of that. So you say, yes, please.
But please, how important is the original document as compared to a duplicated one? Like for instance, let's say you are issuing a GCR, and then maybe you issue the original one to a customer, and then you ask the customer to produce the original one, and he's unable to produce it.
I want to get you well. You gave something to your customer.
Yes.
When you give anything to a customer,
I'm talking about a GCR. Let's say you issue a GCR.
Well, please educate the class about GCR, because the way you and I understand it will be different from the way the other students understand it. Okay.
General counterfoil, a receipt.
Okay.
The one that is used by Controller and Accountant General.
Oh, go on, just so that people.
Yeah, so issue the original one to a customer, and then you ask him to produce it on a different day, and he's unable to produce.
When you issued it to a customer, was there a receipt? If you give something to somebody, there has to be a documented receipt or acknowledgement of receipt.
So that is the receipt I'm talking about.
Yeah. So who is being audited?
So let's say we are keeping the duplicated one. And then when auditors came, they were asking for the original copy. And we were asked to let a customer produce it. But here lies the case, the customer was unable to produce it. I want to know how important is the original copy.
So original copy is always one. Original copy is always important. Of course, photocopy helps the issue. But if you want comparing the photocopy and the original.
No, sir, please, this one is not a photocopied one.
I know, your own is a fainted something.
Yes.
That thing, I don't know how to call it. It's like a carbon paper, kind of.
A counterfoil.
Yeah, that thing.
Yeah.
But in the Momo Democrat, normally that thing is kind of the same.
Mm-hmm.
So it's not like you made a photocopy. So in what you are talking about, both of them are actually original. Like it's just that is there. I see. I don't know if the class actually understand what he's talking about. That thing.
I think the original is like white. The duplicate have different colors. So whatever you write on the original reflects on the duplicate.
Yeah, it reflects on the duplicate.
Yes, exactly.
But it's very difficult for you to manipulate that
one
copy. Yeah, it's very, very difficult.
Yes, but here
and what he is talking about, they are all having the same serial numbers.
Everything is the same.
Exactly.
So it's like that one is not a photocopy. So both looks original. In that case,
Yes.
that is how it is. It's a
But the auditor is interested in the one that we use the pen to write on.
and that one has gone to the
That one supposed to be given to the customer
the
or
customer.
whatever transaction that takes place.
That
That one
yeah,
will be
that
given
one
to
will
the
Yes.
go
person.
to the customer. If the auditor
Yes.
wants the original of that one that has
So
gone to the customer, then the auditor will have to send an email to the customer to just, even if he can't get the copy, get a statement from him that he had that thing, and that is the balance between you and the person.
So the customer, so he asked that we should try to let the customer produce the original,
You can't force
copy.
a customer to produce an original
but
copy.
the customer was unable to produce it, and the auditor wasn't okay with it.
No, but you see, I mean, it's an art and it's an understanding work. You can't ask a customer to give you back your original copy. The customer has no obligation towards your auditor.
Yeah, so I don't know, but we
Please just talk to the auditor to understand it clearly, because most of these things,
showed
the moment
him
it's
that this thing, how
written
they got
and
the
given to the
duplicated thing.
customer,
It's out
that
of
is
your
the
control.
person's acknowledgement
Yes.
of making a payment on the balance outstanding. So it is not mandatory that the customer have to
Has
produce
to
that as
provide that thing.
evidence, as an evidence to acquit any situation. No, that's why we have the duplicate there. So if he's not convinced, we should pick the serial numbers and then he cross-check them.
Exactly. Exactly.
The auditors,
Go on.
problem was not, so he was not happy because the customer was unable to produce
I'll grow
the
in it,
original.
so because the customer has no obligation. The carbon copy, and that's in there.
I
It's
don't
a
know, I don't
carbon
know.
copy.
Some of the auditors,
It's not like you photocopy though. That thing is I mean, it's like you see this
Sir.
black.
Sir,
Yes, please.
please ask him whether the person who is doing the auditing is just a new person, is a junior officer or a senior officer.
So that the experience comes in.
Yes,
You know,
because
this
sometimes
particular auditor is the lead team.
Is it a
member of
forensic
the-
audit?
No, please. It's just this
Is
ordinary.
it an
audit.
investigation?
No, they are just performing their
routine
regular annual.
audits, the
Yes,
routine
routine
audits.
Charlie?
Yes.
From Ghana
Charlie?
Audit Service.
Yeah, from Ghana Audit Service. He's actually a member of the ICA.
Oh, really?
And now, yes, sir.
I rest my case.
Chief, I think we don't have to question the auditor. Maybe there is another tone report somewhere to him before he came to the place.
That is why I'm asking, is it an investigation?
So he may go beyond what we are thinking. Therefore,
Yeah, that one is
we
not.
don't-
That one is not audit. That one is
They are
investigation.
just performing their routine auditing.
Because
They're just
investigation is
performing their
when,
routine, you know.
when you have had a prior information about something that maybe there's somebody has tipped that auditor of that sky. These people, if you go there, check them, they've done one or two. You understand? That one is different. If that is not the case and it is a external audit like the way we are learning, investigation is different. If that is a normal audit that we are talking about, then
yeah, it's a normal routine audit. And
maybe you people too have been doing something.
No, said that I can't saw that maybe they had a prior information about our.
Sure, they will definitely have something. That is why. So that they can also maybe we are just celebrated Xmas and the system is out, so you have to come well.
By now, I think
I mean, that is what maybe I suspect. Maybe auditors, most of them are just acting like the police.
Yeah. If it is an investigation, that's what they do. But unless it's it's an investigation. Nobody should be
No,
actually going that level.
The
Yeah.
kind of auditing you teach and know, and maybe you conduct is different from some of your colleagues. So it's a
Yes.
strategy. It may not be an investigation, but they do it.
Well,
And
When they are hard up, they did some small no coffee.
See, that is what I'm coming to. So, see, I've been in so many audits. Even external statutory audit is part. Like, you see, this one is audit service. What about GRA? They do the same thing. They do the same thing. So it's like sometimes you have to hit hard for the person to say, "Oh, master, calm down. What at all? What will it take?" That is Ghanaian audit, you understand? Like the way the person had, then it means you have to give something to pardon something. So sometimes that is it. Oh, is it that? Oh, it went off, eh?
yes.
So like I don't know if you heard what I was saying. Maybe you guys too, your hands are hard. You get hard hands. You don't soften your hands. So each time the person comes, he takes lorry fare, he comes, you go like that, you say, okay, that kind of thing. So these people, they want to tell you that they have come to work. Sometimes
No, but I think that is I think that is what the law says. That's why they are paid well as compared to other staff in other entities.
Oh, but no, see, we are questioning, we are not talking about their work in general. We are questioning one particular thing. All right. So if you are in a government, MMD or whatever, you did a contract with somebody, you signed the thing, and maybe you made a payment, you issued that receipt. This black thing. Oh, is this internet causing problem like that? You know this black thing that they put inside the hard paper. Yeah, you put it there, you write, the thing comes behind. Now, you asking the customer to bring you the original is where the issue is. You can ask the customer to confirm, like we talked about here, external confirmation. We will look into that again. But you can't ask the customer to actually bring you the original copy itself. No. You can ask the customer to confirm that as so and so said he paid you 20,000. Can you confirm? Please, are you getting it?
They wanted to see the original.
No, that one there, it doesn't make any. I don't get it. But well, I don't think any law on the land says that the customer should bring back the original for audit purposes. There's no law on the land like that. All right. So that is that. So apart from those are the things. Then let's talk about the fact that if the evidence is coming, so this is the reason why I am coming to what you are saying, and probably that's what they are basing on. It's a practice, but I mean that is the way extreme. We said the third party, the evidence from the third party, is more reliable than the one that the client gives. So that is what they are doing, client-generated evidence. If it comes from the third party, it is more reliable than the client's own. And that is what they are trying to do to you. But like I said, you can let the third party confirm. Okay? Confirm. Yeah. So if in your receipt, the one that is in your office is 50,000, the client can confirm it's 50,000. It's as good as the client telling you the originality of the thing. If the client said, oh no, I received 45,000, then that is it. Then the auditor can draw his conclusion and say that you people have a manipulated figure. So that is it. But not necessarily bring me that copy. I mean, you can only subpoena that copy by court order. You can't. It's not by force. All right. So that is that. All right.
Okay.
So that is that. So and again, if the evidence is and that is why he's also doing that. If the evidence is generated by the auditor, it's more reliable than the one that is generated by the client. All right, that is generated by the client. So the auditor is basically telling you that I don't want what you are giving me. I want to get it myself.
So how would the auditor himself generate the evidence?
That is the confirmation. He sends and you will send. You send an email. Sometimes it depends on the kind of the job. Let's say we want to value your land, and you, the client, you said you have valued the land. This is the amount. The auditor can hire its own independent person to also go and value the land and use the figure he had from the independent person, not necessarily the one that is coming from the client. But in your particular case, the auditor can go to the shop of the customer. And since this is, if it is a statutory thing, then fine. But other than that, the auditor can send an email. And these emails, we don't even allow the auditors to send, though. We let you, the client, send the email. And when the client sends the email, he copies the auditor. So when the customer or whoever is responding to the mail, I, the auditor, I am also in copy. So I see it just as you see it. So it means that because I am in my shop, you can't come and say, please, I'm the auditor of so and so company limited. I want this document. Can you provide it for me? No. The customer has to be in the know. So it is done in copy. All right. So but if it is, let's say, valuation and all those things, that is where you can send an independent auditor. Do you remember what I said about this inventory? That when we are going, there is you from the company, the station manager is there, and an independent person from the auditor, audit company. Yeah, so that is how it is. All right, so that is it. So in your exam, for example, I'll bring that example to you. In your exams, they said that Kofi Ama Limited or Ama Limited, whatever, all right, has a receivable. So they say that. So this is it. Let's say K Limited has in its books receivables of 500,000 Ghana cedis from Y Limited. Y Limited. Oh, today, what is wrong with this internet? What is happening today? This internet.
Ghana network.
Yeah, the network. Oh, my goodness. So, yeah. All right. Please, are we back on track? Are we back? Can you hear me?
Yes, please.
Yes.
Sorry, I don't know what is happening to the internet. Y Limited. So let's say Y Limited just went on bankrupt. But K Limited has refused to impair the receivables. Because they said Y Limited said they will surely pay the debt. comment. You are required to comment on the sufficiency and the appropriateness of evidence to the treatment of the receivables. What will you say? Yes, what will you say? What will be your answer? Yes, who wants to talk about it? Please, if we are online, let's be fast about it, okay? We don't have much time. Yes, what would you say? Hello?
Hello, sir, we are here.
Why are you silent like that? Yes, what will you say? You've learned something today, a sufficient and appropriate evidence. Apply it, please. What will you say? This exam question, no, this is not me generating it. It's actually in your exams, one of your past questions. So it's your exams. You've learned something. How will you answer it?
I think you must check the aging, customer aging document.
That is your answer.
Receivable.
That is your answer. Like 6 marks. This is a 6 marks question. And you write, you must check the aging and
Customer aging and confirm from. So this receivable. So you confirm from.
Oh, guys, anybody can also help. Oh. I have 12 people here. Most of you don't join the class. It's very interesting. Yes, please.
Now the question is bold for us to see.
Is what?
It's now bold that I can see well.
Okay.
Yes. So since it's a receivable, in the first place, you have to confirm whether that receivable have been paid to the company.
Oh, they said the person went bankrupt. Please.
Yes. So the first thing to do is to call for the certified bank statement. Thereafter, then you have to call for all the what we call the creditor's ledger or books of records to confirm that yes, there is no any funds available anywhere. Then you have to look at what is the cost for the bankrupt.
Somebody bankrupt. You want to know the cost?
Yes.
How does that concern you collecting your money?
So that you know what the money was used for.
I now
so
see
that is
why.
The angle where, and then know whether the person have any assets available, so that I can also rely on that asset and then clear myself.
Adelaide, yes, you can talk. Adelaide, you can talk.
And please say, I think I saw a statement that they said they would pay. And from the explanation that you gave, maybe the auditor would want to see a written document backing what has been said.
That's all I wanted.
Okay.
That's all. That's all. So you saying that you check that they have any assets, blah blah blah, and all those things. At the end of the day, they are telling you that they will pay you the money, even though they are bankrupt. They are telling you by math. You just learned this saying that written is more reliable than oral statements. So you see, in your exam, nobody is going to ask you these things. Oh, no. Nobody is going to ask you all these things. No. You have to apply it. That is it. So yes, they've gone on bankrupt. Yes, but they are giving you the fact that, okay, so actually, what has happened is that you have 500,000 from them, but they've gone bankrupt, which means that this 500,000, you may not get it. But they say they will pay. If they say they will pay, it's not just word of mouth. It should come with a supporting document, and I agreed something that is written. Not just that I will pay. No. So get what? The backing. All right. So this is what we are going to do. So this is just a teaser just to introduce you to evidence. And the examiner has said that students don't know how to answer evidence questions. So when you are answering evidence questions, there are certain things that must come into play. And that is the next thing I'm going to teach you. So you've learned the qualities of audit and all those things. So we are going to go to how to actually get the evidence. So how? So that is it. Now, I don't spend time reading notes on these things for you. I teach it very simple. I teach it very simple. You are auditing somebody, okay, and you need evidence to back up your conclusion. So now, how will you get the evidence? So that is it. How will you get the evidence? How? Now, so evidence gathering. Evidence gathering. How do you get the evidence? So the first part, I'm going to divide the board into 3 parts. The first part talks about how to obtain evidence. How to obtain evidence. And whether you like it or not, it will come in your exam. It is also called audit procedures. What are the audit procedures? All right, the audit procedures. If you watch the videos, there is an acronym that I have developed for that. If you watch the video beforehand, there's an acronym that I did before that. Yes, who remembers? Anybody who watched? What was the acronym?
AEIOU.
AEIOU. AEIOU is the vowels.
Vowels.
The vowels. Everybody knows the vowels. So it's very difficult for you to forget it. That's why that one makes it more easier, because you remember it. So the vowels, if you want audited evidence, then it means you need to go through the process of the vowels. AEIOU. And what was A? What was
Analytical procedure.
Analytical procedure. What was E?
Inquiry.
Inquiry. Or external confirmation. We learned it, right? That you can get external confirmation. I is for what?
Inspection.
Inspection. O.
Observation.
Observation. U is what?
Recalculation.
Recalculation. that means you actually watch the video. Why not R, but because you can remember the vowel. So the recalculation, this is the sound, the vowel. Oh, recalculation, all right? Recalculation. So that is that. That is that. Now, let's understand what these things mean. When we say analytical procedure, what is analytical procedure? What is analytical procedure? When we talk about analytical, so when we talk about analytical procedure, we are talking about comparatives, okay? Comparatives, making comparisons. So it's all about making comparisons or making comparatives. What are the comparatives we are talking about? You are comparing things, okay? So you are comparing, for example, you are comparing last year versus this year. So current year versus last year or previous year. All right. Not only that, you can compare budget versus actual. Again, you can compare the entity versus the industry. And that is what you do in your ratio analysis. The ratio that you do in corporate reporting and financial reporting. In audit, do you know you can be asked to do ratios? That thing is interesting. It came in one of the papers and people were not really prepared. People didn't even take calculator. Please, when you are going to write your audit paper, go with calculator. People didn't even take calculator. Then the ratio questions came. They are supposed to do analytical procedures. People don't even know what the analytical procedure is. They didn't even go with calculators. So please, when you are going to the exam hall, go with calculators. After all, we did something last 2 weeks or last 3 weeks that made you know that you need to calculate materiality. Do you remember?
Yes.
Yeah,
So let me ask a question. For the comparative figures, let's say you are in this year and you are supposed to sign off an audit, but the comparative figures, there was a mistake in it. The original, like the previous year had the right figure, but this year the comparative
the opening
amount,
balances,
yes, has a mistake. Is that really a big deal?
It's a very big deal. We'll talk about that. It's part of the review part.
Okay.
It's a very big deal. Me, I can give you personal testimonies of this. It's very interesting how people steal money from petty cash book. The petty cash book balance, opening balance, is different from the closing balance from last year. It's very interesting. It's a very big deal. Yeah, we will discuss it very soon, okay? We will discuss it. All right. So
I have to know how they do that.
It's very simple. It's very simple. Oh, this job is very interesting. It's very, very simple. So I will talk about that very soon. If I don't talk about it, please remind me. And thank you for that question. All right. Now, so you do that comparatives. You do that comparatives. Now, analytical procedure, there are 3 stages to audit. What we are doing now here in evidence, we are doing during the audit, the process, we are in the process. We did the first process of audit, that was planning. Do you remember planning? Before you go to the audit client office, you have to stay in your office and plan, all right, and plan. Then you go to the client office, then you conduct the audit, that is the during. Then after that, you come back to your office. So there is a review part, all right? So we have 3 stages of audit where we apply analytical procedure, and each stage has its purpose. We apply analytical procedure at the planning stage of audit, the planning stage, or what we call the pre-audit. Okay, so what do we do at this place? You are trying to use at the planning stage, you are trying to use that to identify risky areas. You are trying to use that to identify risky areas. Now, analytical procedure at the planning stage is actually governed by ISA 300. ISA 300 and ISA 315, understanding the entity and its environment. ISA 300 is audit evidence. Now, so at the planning stage, the reason for you doing the analytical procedure is to identify risk. Let me give you a practical example. Identify risk. Last year, when I looked at the client receivables, I realized that it takes 45 days for the clients to pay their debt. Then that is last year financial statement. Then the current financial statement that I'm auditing, I realized that it takes 97 days for the clients to pay. What can you see there? There is a risk. Can you see that? Can you see there is a risk? Guys, can you see it? Let's be interactive, please.
Yes, sir.
Where is that risk emanating from?
I think the number of days for
control.
Yes. Yeah, you are right. It's related to in the internal, so that is a control.
Do you remember when we were doing risk? I told you there is inherent risk and there is control risk.
Control risk, yes.
Do you remember?
Yes.
Yeah, so that is it. It means that their control systems in dealing with receivables is getting low. Now, what you need to understand is that this thing can lead to the company being liquidated. You will not be liquid anymore. Because if it takes a long time for your clients to pay you, it means you don't have working capital. Short-term liquidity can be a problem. Guys, you need to start thinking wide and connect certain dots, because your exams is not about explain this, what is this, define this. It's not like that. So you need to think well. So the analytical procedure, you need to do this. In fact, let me give you an obvious one. That one is not really a risk, but it helps you. So that is the second one that I'm going to give you. Another example. The analytical procedure at the substantive procedure stage during the audit. So that one is substantive testing. For substantive testing. For example, let me give you a simple example. There are so many examples I can give, but let me give you a simple example. Now, the first example is simple. Last year, my PPE was 500,000. This current financial statement that I'm auditing, it is 1 million. What does that tell you? What does that tell you?
There is an increase in the GDP.
There is increase in what? The PPE. Okay.
You say GDP.
No, I said PPE. Hey, GDP, the other government.
Please, the figures again.
Last year, my PPE was 500,000 Ghana cedis. This current financial year that I'm coming to audit, it is 1 million. What does that communicate to you?
They are not investing in. They are not investing.
Hey, they are not investing.
They have invested more. They have invested more. So there
is it overcapitalization?
Please listen to my question. Last year, the PPE was 500,000 Ghana cedi. This year, the PPE is 1 million. What can you see?
There is an increase in the PPE.
I'm listening. There is an increase in what?
PPE by 500,000.
That is the investment, which is an increase of 500K to the previous one, the PPE.
Okay. So as an auditor, it tells you that they've bought another PPE. Is that not?
Yeah.
Yes.
And so that forms the basis of you going to see the building or the people, whatever PPE it is. That is it. It forms the basis for you asking questions.
Yes, sir.
Before you go to do the audit, there is an expectation you expect. You make an expectation. So you create an expectation. Then you go and verify your expectation. You verify your expectation with testing, detailed testing. Then at the end of the day, at the final stage of the audit, you compare your expectations versus the actual thing you saw. Okay, so the final stage, we use the analytical procedure to make conclusions. So that is that. So before maybe you saw that, oh, okay, 45 days have gone to 97 days. You come and do the testing. You can now find the reasons why the 47 has gone to 97 days. Then finally you make what? The conclusion. So that is what we use analytical procedure for. All right. I'm just explaining the things to you. So I said how you get the evidence. Number one is analytical procedure. Number two is the external confirmation or an inquiry. Now the external confirmation, we will stay a little longer there because you remember when we were doing the bank balance, we said that you go to the bank for the bank statement. Somebody said that. Do you remember?
Yes, sir.
Yeah.
Yes, sir.
Yeah, so that is it. So we want to look a little deeper into external confirmation. So the things you need external confirmation for are typically the bank balance. We talked about the reliability of it, that the fact that the audit evidence is more reliable if it is in a documentary form. All right. We also talked about the fact that it is more reliable if the auditor gets it himself. We also talk about the fact that it's more reliable if it is the original copy. All right, so all those things. So we use external confirmation for these things. When it comes to bank balance, we did another example on receivables and payables, right? We use also external confirmation for inventory. Remember, we talked about it. Inventory. Properties, deeds, properties. All right, properties. If there is investment, it is also part. Loans are part. Account payable balance. So all those things are part. Now, how do you get the external confirmation? How do you get the external confirmation? So let's go deeper in getting the external confirmation. Now, sometimes, you see, the external confirmation, how does it happen? Like I told you, the entity will send a confirmation request. Please, that is how it happens. So even, so like the person who is saying that the auditor is saying that they should go and retrieve the original copy. So it is the entity doing it. So the entity is the one that sends a confirmation request. It's the entity that sends a confirmation request. So the entity must do that. And most of the time they do that, they have to copy the auditor so that the auditor also get the response in real time, the same time. But you know, sometimes the entity may refuse to send it. I've worked in a company like that. The auditor wants evidence. Send a letter to your people for confirmation. They will refuse. All right, they will refuse. So that is it. And so most of the time, these days it has become a routine that the auditors will bring you the word, the letter, the body of the letter, what should go. Then the company will print it on their letterhead. Then they send it. So that is what has been happening. Now, if the management refuses the auditor the confirmation request, what then happens? Then the auditor must ask the entity, why are they refusing? Why are they refusing? So please, that is it. So we are looking at management refusal. to allow auditors to send a confirmation. So like I said, under normal circumstances, the entity said, but these days the practice has been that the auditor will give you the Word document. You will put it on your letterhead. You will print it. When you print it, or yes, you print it on your letterhead, you will sign. You, the entity, you will sign, not the auditor. The entity will sign. Then you bring the letter to the auditor. Now the auditor now sends the letter to the various creditors and debtors or the banks. And because the auditor must state that they are your auditor, and this is a letter coming from their client for the bank to confirm one or two figures. So that is how it happens. Now, if the entity refuses, I said the auditor must inquire reasons for refusal into the reasons for refusal. All right, so that is that. Now, if it's all about evidence, because you want to send that in to obtain evidence, and if they are refusing you, then it means that you need to understand why they are refusing you. Then you evaluate their refusal in terms of risk of material misstatement. How is that thing affecting your evidence gathering and your opinion? So you evaluate the effect of their refusal. The effect will always be on your opinion, the opinion that you will be giving. That is where the implication will be. All right, that is it. Then at the end of the day, you will now find out any alternative procedure you can use. All right, so perform any alternative procedure as an auditor. You perform alternative procedure. So that is basically what you do when they refuse you. All right, that is it. At the end of the day, we will learn something that talks about you communicating these things to those charged with governance. We will learn something about that. If it is, it affects your audit opinion. So when we are talking about audit opinion or audit report, we will talk about that, because right now, even if I say it, you understand it. So let's get there. When we are talking about ISA 705 modifications to audit, then we will come back to this thing. All right, so basically that is that. Now, so at the end of the day, we are saying that you will send a confirmation. Now, the confirmation, we have types. We have types of it. You need to know the types, because sometimes I see the examiner actually troubling students on that. Even the what we call the service organization control type 1 and type 2, I see the examiner troubling students on that. So we want to talk about that. Now, so we have the positive confirmation request and we have the negative confirmation request. Positive confirmation request and negative confirmation request. All right, so that is that. These confirmations. We have the positive request, confirmation request, and we have the negative confirmation request. You need to understand them. Now, what is the positive one? So the positive one is like you send a request to the customer or the creditor and ask them to respond directly to the auditor, indicating whether that customer. So what we are saying is that, like the example I gave you, you have sent a letter that the people should confirm that so and so owes you 500,000 or 1 million. So that is what the confirmation. So this is it. So we say that I don't know if I have a copy here in my room. No, I don't think so. I don't think so. Hold on. Let me find out if I have a soft copy so that I can show you so that it will be more practical. Okay, guys, can you see my screen now?
Yes, sir. Yes.
All right. So this is it. So to whom it may concern, bank account verification letter. So this one says we draft this letter to verify that the client aforementioned holds an account with us. This is the response. So you see, this is a response. So it's a response that is coming from the bank. His account number is this and was open on this. And at the moment, this is the balance. So, but this is not entirely what I'm looking for. So we have so what I am talking about is you, the auditor, going to request for it. Now we have two types. We have the positive and we have the negative. So the request for this one, you see, this one is a response, meaning that the auditor sent the letter, and this is the response. Whenever you see RE here to a subject, it means a response. Now, so the response, the letter would probably have been sounding like so and so confirm for us. So the thing is that so and so says that he has an amount of $22,440 in his account with your bank. So you will state that figure in it. Then you will now ask the bank to confirm it, or agree or disagree. That is the positive. All right, to agree or disagree. So if you sent a letter to the bank that they should agree with the balances or disagree with the balances, you are not actually asking them to state the amount. You have stated the amount and you are asking the bank to agree or what? Disagree. So it's not a matter of the bank stating how much they have. It's about the matter of what? The bank agreeing or disagreeing to the balance.
So it's like the bank to confirm that
exactly
that is that balance.
Exactly, confirm or not. So it's not about you stating the exact amount. It's not an open a letter where you write the amount. It is the one that you confirm. You agree or you disagree. You confirm it or you do not. So if it is not like that, then it means that it is not, you don't agree, you disagree. So that is it. I wanted the personal one that I drafted in my office, but I can't find that one for now. So that is that. So that is that. So it's about agreeing or what? Disagreeing. That is it. But the negative one, so here we have they agreeing and disagreeing. But the negative one, that one, the confirming party disagree with the information provided. So you see, this one is you give space for whether they agree or disagree. But the negative one, it's only for disagreement. It's only for this. We disagree. So that one, there is no option for you to agree. You only respond, you disagree. So that is it. That is the negative confirmation request. So it's a request that the confirming party respond directly to the auditor if and only if they disagree. So if they don't respond to you, then it means that it is okay. Please, do you understand the difference between the two?
So would the auditor take permission from the clients?
Oh, yeah, like I said, it is on the client's letterhead. That one alone is the permission enough.
Oh, okay.
Yeah. So that is it. That is it. That is it. So you see, this one, if the client doesn't respond, then it means that he agrees. He only responds when he disagrees. So in the case of the we say that in the case of the positive confirmation request, there has to be a response. There has to be a response. But in the case of the negative confirmation, there may not be a response. Did you get the difference between the two? Guys, let me know if you understand. I need your response. Other than that, I'll go ahead and be talking. I'll move on the assumptions that you understand.
Yes, sir. We are okay.
All right. So that is that. Okay. So that is a negative confirmation. The fact that you don't talk means that silence means consent. That is a negative confirmation. But I need your positive confirmation. I think even if you forget, this thing I've just said should actually help you understand the two. All right. So that is that. That is that. Okay. So those are the two confirmations you get. Now, there is also this concept of ISA 620. ISA 620 talks about using the work of an expert. Because if you are going to inquire external party confirmation, you may be using an expert. Okay. So you may use the work of an expert. We also talk about ISA 610. ISA 610 is about the use of the work of the internal audit. The use of the work of the internal audit. All these things are part of the people that the auditor is going to seek evidence from. Of course, if I want to audit the control of the entity, then I need to know what the internal auditors have done. So I've already told you that in timing of audit, we have interim and we have final. All right. So those are so let's quickly talk about these two. Then we will talk quickly about using the type of report that comes, the SOC1 and the SOC2. I used not to teach these things, but I realized one time that the examiner brought it in the exam just once. That appeared once. And for them to definitely, they will get you something that you have not heard of to try and disturb your life. All right. So now let's quickly talk about using the work of an expert. Using the work of an expert. They are all part of evidence gathering, and they are part of external confirmation. Now, it is very quick. I'll be very, very quick about that. If you are using the work of an expert, there are three things that you need to do. You have to check the expert's competency and his capability and his objectivity. All right. So the competency, his capability. Somebody can also say his credentials. But most importantly, his objectivity, what we call the independence. His objectivity is very important. All right. So you have to agree with him on those terms. Sorry. You also have to agree with him the nature and the scope of the audit. What he's going to do. The nature and the scope. What he's going to do. So that is it. Then, lastly, what you need to also check out for is to assess his work. The assumptions he used, is it consistent? Is it consistent? The consistency and the reasonableness of his assumptions. The assumptions that he used, the reasonableness and the consistency of it. Is it consistent with generally accepted assumptions? So these are the things you consider, all right? Basically, that is, if you are going to bring somebody to do something for you, check his capability, all right? Define the nature of the scope of the work, then assess the work that he has done by assessing the assumptions and the reasonableness and the consistency of his assumptions or his findings, all right? Consistency of findings. Let me make it like that. Consistency of findings. All these things, you find it in the manuals that I've shared with you on your page, and those of you who also have the book. All right. So that is that. So lastly, over here, again, you can also, so this one is ISA 620. ISA 610 talks about using the work of the internal auditors. the internal auditors. Can you trust the work of the internal audit as an external auditor? Can you use the work of the internal audit? If you want to use the work of the internal audit, then that too, the same thing, check their competency, check their capability, and most importantly, their objectivity, which is their independence. So check their competence. You are going to use somebody's work. Is the person that, okay, for you to make this thing remember something that you can remember, ask yourself, if you are sitting in the exam hall, then there is something that you can't do. Then somebody is sitting by you and you ask him for the answer. How do you feel? Like, let's be realistic. Or how do you feel when you are asking somebody in the exam hall for an answer? You know, you need to know the competency of the person that you are asking the answer from. You know that, right? Or you people haven't asked your colleagues before.
True. 50-50.
And I would say but as in his competency can help you a little. If you believe, you trust that this guy is a
time no deal.
Oh, no. I know time no day, but you see, there are somebody that is sitting by. Sometimes you rather not ask. You feel like we're part the meaning, but me be some. But there are some people around you, and then the say you're correct or say you're correct. So that is it. So you check the competency of that person. All right. So that is the function. They are the internal audit. Check the competency and check their objectivity. Exams your objectivity be any baby. But the audit, there's objectivity. Okay. So that is it. Okay. So that is what you need to check. You can also check the systematic and their disciplined approach. I mean, how they go about their work. All right. So that is it. Then again, you can also check the valid conclusions that they've reached as internal auditor, and even the sufficient appropriate evidence obtained. Check their sufficient and appropriate evidence obtained. Check their if their conclusion, the validity of their conclusion. Sometimes you go to audit a client, and the client will tell you that here we don't steal. It is in their written representation that, oh, our internal controls are legit. Nobody steals anything. But is it true that there's a company, somebody doesn't steal something? Is it true? It's not true. So that is that. We will talk about outsourcing later. But in fact, let me do that quickly. I mean, I'll be ending the audit evidence thing very soon. I'm ending it today. So let me fix everything in so that I don't go back and talk about any other thing. In terms of the evidence, how you get the evidence, the AEIOU, as for these three, I won't talk much about it, but these two are the troublesome ones. And we've done the analytical procedure. We are talking about the external confirmation. Sometimes too, you outsource part of the audit work, outsourcing. You outsource. Yeah, sometimes too, you outsource. I remember, when was that? It was in 2020. I've forgotten the year, but that time IFRS 9 had come first. And even my auditors in my office were the auditors coming from Deloitte. Deloitte had not actually had the training on the IFRS 9, how to do the IFRS 9. IFRS 9 is more of finance work. So they outsourced the IFRS 9 to somebody. And I remember, because we had to pay that person, was it 10,000 Ghana cedis? Yes, we had to pay that person 10,000 Ghana cedis to be able to do the IFRS 9 for us. Yeah. So sometimes the auditors even don't have an idea about some of the standards, and they outsource it. I remember that one. So they outsourced the IFRS 9 to somebody. That is what they did. Now they made us outsource it because auditor is not supposed to actually prepare the account for us. But we too, at the time, we didn't know how to apply IFRS 9 in our financial statement, especially on our receivables. Yeah, IFRS 9 on our receivables. You see, not every company has financial instruments in terms of their derivatives and all those things. But receivables too, financial IFRS 9 applies. So I remember we had to contact the guy. The guy took, 10,000 Ghana cedi to do the IFRS 9 only on our receivables bill. You see how this thing can be expensive. Only the receivables, 10,000 Ghana cedi. Yeah, I remember.
Fee can be.
Please come again.
And the audit fee can be high, Papa.
Oh, audit fee there is high. You people have not seen the ICA release document on the charging of audit fee this year.
No, please.
I'll put it on your platform when we are done with the class.
Yeah, we've seen it. You've seen it.
You've seen it, eh?
I have not seen it.
No, please.
I'll put it on your platform. So sometimes you can also outsource. So
hourly charges.
Yeah, the hourly charges. The assembly Ghana happen. Yeah. So so sometimes you outsource the work. Outsourcing the work is letting an external company do it for you. Okay, so there are some parts, instead of doing it inside, you outsource. Okay, so sometimes you outsource the work. Okay, so you use maybe a service organization to actually do that part of the work for you. But what I'm interested in is the report that they give you. The report. So the report is called. So when you use so you outsource to a service organization. Now, their report, we call it the SOC, Service Organization Control. All right. So these are the reports. We have the SOC1 and we have the SOC2. Of course, when you are using somebody that you are outsourcing the work to, you have to check the independence of the person. Because of issues of integrity and confidentiality, you have to check all those things. But so you need to also understand SOC1 and SOC2. It's not something you should burden yourself with, but just have an idea. So you can listen one and not even go about it again. All right. So we have the SOC1 and the SOC2. The SOC1 report, so it's also known as we have the type 1 SOC1 report and we have the type 2 SOC1 report. Type 1 SOC1, so this is a type 1 SOC1 and we have type 2 SOC1. Then even the SOC2 too, we have type 1 SOC2 and type 2 SOC2. So these are the reporting that they bring. Okay. Now the SOC1 actually evaluate the suitability of the service controls, the SOC that you have, the reporting that they are done at a particular point in time. So it gives you a snapshot of everything. So what it does is that you gave me a work. These were the criteria you said I should do. These were the things that I should do. This is what I have done. So it is measured whether the thing meets a specific criteria. So here it's about meeting a criteria, specific criteria. All right, so that is it. So you design it according to a specific criteria at a point in time. So that is how your reporting is. But so here we are talking about suitability. But the type 2 of the SOC1 is just talking about how effective the thing is over a period of time. So how effective the controls of an entity is over a period of time. So this is a specific period at a point in time. Specific point in time. The type 1 is a specific point in time. Type 2 is a period of time. Period of time, which means it can be more than one. That's all. Now, why are we learning this? Because what it does is that the person providing the service, needs to tell us how effective controls are, because it is going to affect what they do. It could affect the client financial reporting. Okay, so how somebody's control system is actually affect how their financial system is. So basically, that is where that thing is coming from. All right. So SOC2, SOC1 basically is talking about these. It provides information about the controls implemented by the service organization. That is it, the controls. Because if I'm going to outsource you, I need to make sure that you have controls about confidentiality. You have controls about some integrity issues, your independency. So how it is at a particular point in time and how it is at a period of time, it matters. The period of time, normally we are talking about 6 months. It matters, okay, because it's going to affect the operational effectiveness of that service organization. So, but the type 2 actually talks about how the person, the entity, the service organization handles sensitive information. Sensitive information. So that is it. So when it talks about, so that one too, like we said, how they handle sensitive information in terms of their controls of how they handle sensitive information at a point in time. So that is SOC2. How they handle sensitive information at a point in time, and how they handle sensitive information, that is SOC type 1. Type 1 of SOC2, sensitive information at a point in time, and the type 2, sensitive information at over what? A period of time. So how they will handle your information. So the human bread an external person, how are they going to handle those sensitive information at a point in time and a period of time? So period over time. So that is that. Point in time and period over time. So these are just theoretical things you should just know as part of your
Sir,
yes, please.
Apart from the confidentiality issues that the entity must be able to meet, what are the criteria that the entity that is outsourcing
to consider?
Will consider the entity that is going to the service entity.
Of course, you have to also check out their. So we also talk about the competence of their staff and the competence and the resources available. You have to check. You know, in Ghana, for example, they give work to anybody, whether you have it or not. But sometimes you need to do critical assessment of the quality of staff that the person has, the resources they have to be able to do the job. But I know here, when your resources in the credit, now I fast their corporate resources not be shaped.
That's why they can use a company that has been formed overnight.
Oh yeah, that is why they do that.
The higher contracts.
You know, I had one of these people, one of these MPs, or he was going for this delegate election, like within party, within the same party. Then he was saying that he knows that some of his colleagues, they have formed construction companies. So instead of giving the job to somebody, they will go and form a company overnight. Then the money that have been given to them to go and give to somebody to go and construct, so they will give it to themselves. Then they themselves will now call 1 or 2 people to come and do the job. So it means that they've captured the money.
Yes.
Yeah, that is what happens. But you're actually supposed to check the competency, the availability, their track record, and all those things. But here we don't do that. Only track record. As a government, this thing, that is what happens. It's just unfortunate, but that is the world we live in. It's normal for us now. So he is saying
Say that is the Ghana we live in, not the world.
He is saying that he will not do that, and that is why they should vote for him.
So who?
Yeah, I've forgotten the name. Yeah, I don't actually. I heard him talking. It was an interview conducted on the radio. Yeah. I'm like, I got angry, so I even turned it off. How can you even say that? So you are aware your people are doing that? So
Very serious.
That is it. All right. So basically, that is it. Ladies and gentlemen, let me just go on. So now you know how, right? So let me repeat the how. What is the how? We said the vowels. What are the vowels? A, E, I, O, U, right? So that is the how, and that is the audit procedure. Now, what are you performing the how on? What are you performing the how on? What? So the how I said is the procedure, right? And please bear in mind, in audit, anytime they ask you how to do something, these are your answers, the how, the same thing. But what are you doing the how on? What are you doing? If you are inquiring from who? If you are inspecting, what are you inspecting? If you are observing, what are you observing? If you are recalculating, what are you recalculating? If you are doing analytical procedure, what are you doing the analytical procedure on? So that is the what. We call that one the source of evidence. Source of evidence. Yes, those of you who watched the video, what was the acronym I gave you for source of evidence? Source of evidence. Yes. Those of you who watched.
COVID.
Is what?
Is it COVID?
No. I said Dada Gobe. Dada Gobe. Dada Gobe. That is what I gave, so that you remember. So those of you chop gobe, who like gobe, how many of you like gobe? Oh, you people don't eat gobe. Hey, Fatao Abdul, you don't chop gobe.
Them be rich people. Them be rich people.
Them be rich people. Hey, Lynn, you don't chop gobe. Perez, you don't chop gobe. Tewa, you don't chop gobe. SF, you don't chop gobe. Richard, you too, you don't chop gobe. Oh, I see. So there.
Sorry, like it.
Me, Gobe has been the sustainer. It has sustained me over life. So I have numbers, the Davis numbers on my phone. They are always on standby. Before I get there, it is already done. So that Gobe is nice. If I go to community 9, I have a special one. In fact, I was born in Kumasi, and the Kumasi centers of Gobe are nicely evaluated. I know the Gobe Center in University of Ghana. The Bush Canteen one is nice. I know I know the Gobe in University of Education. I know anytime I visit any place, the first thing I look out for is the Gobe system. You need to look for the Gobe system. It's very, very important. I fried rice for no problem. So when we were doing the IUPAC naming of Gobe, you people were in there. Oh, I see. Gobe is good. What is D? D here is, let's say, document. A is assets. Oh, I think that I messed up the thing. The one that no bakwamba. All because of
the
Dada Gobe. Yeah. So you can't tell me you forget this thing in the exam. So you can't do that. That would be unfair. D is documents. A is assets. D is accounting. D is directors. A is accounting books. And the Gobe is third party. All right. So if you want evidence, these are the places you can get the evidence from. These are the places you go for the evidence. All right. These are the places you go for the evidence. All right. So third party confirmation. So if you want to do analytical procedure, what we said analytical procedure is comparative. What will you conduct the comparatives on? Most likely you do the comparatives on the accounting books. When we say accounting books, we are talking about the journals. The day books are also called journals. We are also talking about the ledgers, trial balance. All right, so those are what we call the accounting books. All right, so here too we are talking about the assets verified. All right, so basically that is that. When we talk about the directors, we are looking at management representations. All right, so that is that, management representation. We will talk about management representation. It's a form of evidence. If you
what about minutes?
Minutes is also under directors. Okay. All right, minutes. Of course, they go for meetings for you to have the minutes. So that is it. It's also under directors. All right, but me, I like placing the minute here because it's a document. All right, so me, I like putting it here, board minutes, because the minute is also a document. Board minutes, that is where you see it from. Corresponding letters, GRN, goods receipt notes. All right, GRN, goods receipt notes. So those are the things. So here you have these things. You have the cash book. I know you know cash book is part of the day books, trial balance and all those things. All right. Now, in audit, somebody is giving me a little feedback. Stephen, I think it's you. Kindly check for me. So in audit, if you are auditing, what are you auditing? These are the things. So, and these are the sources of the evidence. And I'm going to give you a summary of the last aspect. Why will you do that? Why? Why? So for example, and please, I will say that after I have done the why. If you want to inquire or get external confirmation, where are you going to get it from? From these things, where are you going to get it from? If you want to inquire, who can you inquire from? If you are doing external confirmation, who can you do that? Where can you get that thing from? From these sources, yes.
These are the third parties.
So third parties, so like this, right?
Yes.
Good. All right. If you are doing analytical procedure, which one can you do it on? Comparatives, which one can you do it on?
That is the accounting books.
Accounting books. Okay. Recalculation, which one can you do it on? So these are what we are going to be doing, and that is what the examiner has said. You people don't know how to answer evidence question. When you are answering evidence question, these three things must happen together in one statement. If he doesn't see the three things in one statement, I say what your pants waiting. These are the reasons why sometimes people feel or they feel like they wrote and so they are failed. Yeah, there is the technicalities. Now I'm going to tell you, I'm going to answer the why here. But before I answer the why, I'm going to tell you that in audit, only three things happen. Only three things. Three things being AAC. That is always what is happening in an audit. Number one is that if you can testify to that, the truth is that one is that something has not happened, but it is recorded. Something hasn't happened, but it is recorded. And the thing that has also happened is also not recorded. So something is not recorded. And I'm going to give you, I've been in this thing, and sometimes myself, I've fallen a victim of it before. So the thing doesn't happen. It doesn't exist, but it is recorded. So the thing doesn't exist. But it's in the books. It is recorded. You say, how can that thing happen? It happens, man. It happens. Some people carry some asset in their books, but that asset doesn't exist. Maybe what? It doesn't exist, but it's in their books. It doesn't exist, but it's in the books. Sometimes it exists, but it is recorded wrongly. The thing is existing, but wrongly recorded. The asset is last week I saw in the news that Ghana is bringing 12 trains into Ghana. When I read that thing, my first comment was like, now railway lines no omowi. Then just yesterday, I also saw in the news that they are not 12 trains, but they are 2. When I read that thing, I said, Ghana for your madian. Next is a Sikana did 2 trains in Eban. And go say did 12 trains in Eban. They take when I saw it, because I didn't understand. So why would somebody actually report that 12 trains are coming? 12. Why? Why on earth? So why that number 12?
Maybe misreporting.
Well, it can be misreporting. It can also be something that the money is actually for 12 trains, but that money, only 2 trains we go see. Only 2 we go see. When I saw it, that was the first thing that came to my mind. I said, I'm in call for your money. Into misreporting there 12. Into 9 I don't know 3.
So please, who are the GFA?
Who does what?
Who audits GFA?
I audit service now. Oh, see, hey. Why are you saying that? Why are you asking that question? Work in progress in Indiana.
Oh, fair.
But they released the report to Parliament. Haven't you seen that?
Yeah, but we don't make noise over their activities as compared to other entities.
Those things there. Me, I always say, let's be careful as technocrats that the people we vote for as MPs, obiani in interest or the co-parliament. And the obi wohwa, is the so the issue ni beba na yaka ho asem in parliament. Na I think you are giving me some feedback. Kindly check. Na about parliament near no. It doesn't work like that. If the person finds no interest or not the parliament or it doesn't care about what is going on. Yeah. These things are normally picked up because opposition parties want something to flag out so that it will affect the outcome of the elections. And yes, yeah, because right now they have to show, especially right now as we are here, NDC has to show the public that the MPP is mismanaging the economy. They have to prove it. So they go in digging. So that's why you get to Okujeto Ablakwa, and they share the responsibility. So Okujeto Ablakwa will be given a job to do. I think right now his current thing is on GFA. His current job. He had one on the National Cathedral and some other thing. Right now he's on GFA.
Yeah, he's on GFA now.
Yeah. So it depends. It depends. So the people we vote there, this issue ni beba out ama what be. So no interested that it will be happening. So it's very, very important that the people we vote to parliament is me. I always say you can vote this guy, is it Cheddar or something to president? Nobody, it doesn't matter. But he has to operate through parliament before he can spend any dime. It has to pass through parliament. So me, I am praying for one day in our country where we will have an independent president, and we will have the parliament for the other two. Or we will have a president. Let's say if NDC or MPP has the president, then the other party has the majority in parliament. That is what I'm praying for. Yeah. Other than that, the system never basase because obi wukra bet me akofana free hospital no we are no.
If it happens, the other party having the majority will just make a lot of money from the government.
Well, but it will give us some sense of equity too in the system. It will give us some sense of equity.
Yes, because there won't be winner takes all.
There won't be winner takes all. But if the other, if you say they will be taking money from the government, then it means that now MPP ni majority na kwa NDC now better now mama take sikani neja on so dia. And they just that is what will happen.
You know that the balanced parliament, the other side is taking advantage.
I don't understand you.
The parliament we have now,
the NDC is taking advantage.
The NDC has taken advantage, and most of them have made a lot of money from arriving at certain decisions that they know that the MPP have the number,
and so
they would have to what they give it.
Well, okay, I see. I get your perspective of that too. And you send your opposition. How will you feel? So that is it. Anyway, let's continue.
To get your project the truth, so
that would be interesting. Anyway, that is on the side. But if we get integrity, men of integrity, well, it depends. Okay, so we said that something doesn't exist, but it's in the books. And those ones that exist too has been recorded wrongly. Okay, then the third thing that can happen is that, so here recorded wrongly means that the wrong amount is recorded. This one, it doesn't exist, but it's in the book. All right, it's in the book. So basically that is what happens. There is a third scenario. There's a third scenario. I think the test scenario will be like, let me think through it. So we said that something doesn't exist, but it is in the book. I wanted to say it is in the book, but you can't find it. But I think that one too is the same as this. So I'm trying to tell you that sometimes the thing is recorded, but you can't see the thing actually. So they will say they have a building, 5 million, but the building doesn't exist. Even if the building too exists, it is existing, but they've recorded them. So the last one is, it is not recorded. The thing exists, but it is not recorded. But not recorded. These are the things that happen. These are the mistakes in audit. So it's either the thing doesn't exist, but it's in the books, or it exists, but it is also not in the books. Or it is in the books, but it is wrongly recorded. So these are the things. These are the things. Now, so that is what we are going to look at. And these things are what we call the assertions. Assertions. The reason why you are doing the analytical procedure on the accounting books is the assertions. The reason. So the reason is called assertions. So the auditor, if you are asked what are the various assertions, that is it. Financial statement assertions. All right. The reason why. So assertions communicate the reason, the why. All right. Take note of that. The assertions communicate the why. Now, the why is what your friend wanted to bring out. Yes, what you wanted to say. The whys are, I've grouped them into 3 just to help you. All right. I've grouped them into 3. Now, check. That thing you are being asked for, is it a balance sheet item? Is it an item in the SOFP? For example, if it is a receivable, you should understand that receivable is in your SOFP. So that is that. The thing you are getting the evidence on. Is the thing about your SPL. So I think, let me do the SPL well so that it will sound well in your ears. SPL, then the SOFP, then your disclosure notes. Your disclosure notes. So the thing you are being asked to gather the evidence from, is it a P&L item? Is it an SOFP item, or is a disclosure note item? If it is a P&L item, I give you KUKA. KUKA assertion. If it is a balance sheet item, I'll give you COVE. These are what I do to make the thing interesting a little, okay? Then if it is a disclosure note, I give you COVE. So KUKA, COVE, and COVE. You can't forget. So AEIOU, Dadagobe, KUKA, COVE. All right, so that is that. Now, what are these things for? So C is for completeness. What is completeness? Completeness means that everything has been recorded. Nothing is missing out. Everything is recorded and nothing is missing out. Completeness. Completeness. Everything is recorded and nothing what is missing out. That is what completeness means. That is what it means. All right. O, when it's in the P&L, O is for occurrence. O is for occurrence. Did the thing occur? I told you sometimes the thing is not occur, but they have recorded it. All right, occurrence. Now make it double R and make this one 1C, whichever one you want to do. But when it is about the balance sheet, O represents obligation or ownership. Ownership, but please, I'm writing ownership, but bear in mind that ownership has been cancelled from financial statement. We now use what? Rights. Rights. So O is for right or ownership or obligation. Obligation. This one is still for occurrence. All right. So that is that. That is that. Then, when it comes to the one that you see here, is called classification, P&L. Is the thing recorded in the correct class of account? C here is for cut-off. So the cut-off is the one that I said we will talk about the opening balances, if you remember. That I said I'll give you example of petty cash. Somebody said, how does that happen? I will talk about that. So V here is valuation, the value, valuation. Valuation. So the values. Valuation. Valuation. So here, say value. E is existence. Existence. U here is understandability. Understandability. Then A here is accuracy. So please get to understand these things, because these are your assertions. Did the thing occur? Classification, is it recorded in the right class of account? Is the right person debited? Is the right person credited? Double entry, is it correctly done? What is cutoff? The best example I can give you on cutoff is that, do you know that when we enter into a new year, people make mistake of, if you are passing a transaction in your book, you can make mistake of putting last year's date, even though you are in 2024. So you write 1st January, instead of writing 2024, you go and write 2023. Has it happened to you before? Especially when we were in school and we were writing on the board. We used to make that mistake a lot. Please, do you understand what I'm saying? Hello, please, do you understand?
Yes, sir.
Yeah, the cutoff. You can make a mistake.
Yes,
even
sir.
now, Krobi board date or that's born in 2023. It happens.
Please, can
you say what?
Please, can you go over the cutoff?
I said using the wrong date to enter the transaction. Wrong date.
Okay.
All right. Accuracy means that the right amount is recorded. The right amount. All right. I believe everybody understands ownership. Obligation means you have the liability, the value, valuation, existence, whether the thing is there for real. All right. So now, to sum it all up, and I'm closing very soon, so you will just practice one example, one or two examples, then that is that. To sum it all up, you cannot write an evidence answer without these three things in place. So somebody said that you do external confirmation, third party. But what are you third party? Why? Why do you want to, why the third party? So to confirm something. So to confirm maybe if it is a balance sheet item. I'll give you an example. I think the example will best suit it so that you can capture the thing. But please, the truth is that if you write an evidence statement, if the question asks you, how will you conduct an evidence on a receivable? The man said there is a receivable amount, blah, blah, blah. So the question we did, let me see if I can find it. Do you remember we did a question where somebody answered the thing was, this is it. Okay, so how will you get evidence? Then you said that you should get the thing written, right? You should get it written. So if Y Limited, for example, is saying that they will pay, you should get a document for that. You understand? So what will you do? So inquire, or so this is it. Obtain an external confirmation, a written external confirmation. So what are you going to get? A documented, all right, a letter or a payment agreement. So you can do that. All right. Inquire. Why? To confirm what? If you want to confirm the fact that they have accepted the liability and they will be paying, that is it. they are confirming their obligation. So basically that is it. Now, I want to give you a typical example, an exam example, so that you can apply these things and let's see how you'll be able to go around it. So what you say is that, for example, if you want to see, so let me give you a typical example whereby somebody, oh, this guy has confused me now with this WhatsApp message. Let's focus. All right. So let's see if you are doing a restructuring of your company. It will be a good company. We call it restructuring. And so therefore, the company has provided an amount to be in their balance sheet, a liability of let's say a provision for reconstruction. So they provided something like 500,000. If the company is doing restructuring, what do you seek to know that the restructuring is indeed? Hey, who is that? What do you get to actually support the provision that they have made 500,000 in their books? If they are restructuring their company and they said they are making a provision, what do you get from the bank to actually support that figure inside the balance sheet? They said they are doing restructuring to a more liability of 500,000. What will you get to support as a supporting evidence for that?
There's, I think, bank statements.
Restructuring. Please, do you understand restructuring? Redundancy provision, 500,000. But in the bank statement there, what do you confirm redundancy? How?
Oh, yeah. I understand it now.
So it means the restructuring is the one you didn't understand. They've made a redundancy provision of 500,000. What will you need to support it? Class, let's close well. I'm done. Let's close well. What will you need?
Say.
Please,
can we consider the value?
What value?
The value of redundancy.
It's 500,000. They said they put in. So, what value? I want to understand you well.
Yes.
Hello.
Yeah. Hello.
Yes, please. I'm listening.
Please, I'll come back.
Expert advice.
Expert advice. The expert advice, how is it going to come? How is the advice?
So let's say you engage a consultant who is going to help you with that.
Help you how? Well, how will he communicate to you? Please, and these are, see, let me tell you the thing. What you are saying is right, too. By his exams, you need to, you see, you can't start a sentence. I say, okay, expert, like, make it, at the end of the day, what is the expert giving you? What will he give you?
Reports.
What is a report in these things that we have discussed today? What is it? Can't you see a report is under a document?
Document.
Hello?
Hello?
Yes, sir.
Yeah, so your report, yes. So you, in fact, if they are going to go on a redundancy, don't you think they went for a meeting to decide that you have a good company?
Yes.
Yeah. Won't that one come under directors, which is the management representative minutes?
Exactly. It's also that. That's why I put board minutes here. So if you want to say directors and the minutes, you want to reference it here. At the end of the day, it has to come from one of these sources. Please, if you write anything outside this scope, you are wrong. Oh. In the statement, and when you get the statement, why are you getting the statement? You are confirming the liability, the obligation. So you have to pick one thing here. So if they say 3 evidence, how you get evidence, you can pick inquire from third party to the reason should come from here. You can't say you inquire from third party, full stop, waiting. There has to be a how, there has to be a what, and there has to be a why in that one statement. In that very one statement. If you don't write to bring in this thing, not necessarily by saying analytical, you conduct analytical procedure on document on no, but whatever way you will phrase it, these 3 things must come. You see, she said somebody said a report. A report is correct. You don't necessarily have to say document, but we all know a report is a document. Please, is that okay? We all know a report is a document. And why do you need a report? It has to answer something here. So if you don't answer that thing here, you are wrong. So in that, every statement of evidence, there has to be a how, there has to be a what, and there has to be a why. So you inquire from third party. So for example, let's go back. If you see anything in their PPE, they say they have a building. For example, let's say they have a building and it is 500,000 in their books. How will you get evidence? How? Yes, who can tell me how? Practice.
You inspect the building.
Inspect the building.
You inspect the building.
Why are you inspecting the building? Why? You say, you see the way you answered. You inspect the building. You have done only 2 of the 3. You have done only 2 of the 3. So you'll be marked wrong. So you say, why did I fail? So you inspect the building to check what? Its existence. That it actually exists.
That is a verification. Asset verification.
Exactly. So if you say asset verification, you are testing existence.
Okay.
So you see, these are the reasons
this
why...
thing there, please, you say this thing you have to take time and then you give us the clue very well. It's not that we are trying to pick.
Oh, I know that. Yeah. Like say I associate. That is why I told you that I'll be doing these things more and more. Every question, you see, your question 2 that I'm ending today. Question 2 is about your audit matters, risk, and evidence gathering. This is 20 marks. 20 marks. We've done audit matters, do you remember? And risk. You know we've done that. And this is the evidence gathering. 20 marks. So, and we realize that the audit matters is about your ability, sometimes your ability of knowledge, your knowledge of the financial standards helps a lot, because you saw it when we were doing the practicals. If your knowledge about the standard is low, as for the evidence there, you can get 10B out of it. It's 10-10, so you should be able to get it. So definitely you should be able to answer something. Half will be there. So whatever that question is, okay, let me bring up a past question, okay, so that we can use it as a practice. Let me do that. So hold on tight. Let me do that. So you remember we've gone through something like this, right? You remember where you have to do calculation of materiality and all those things. So this question there, it provided the revenue, the profit after tax, and it told you. So it says that the draft account of, this is 2017, the draft account of your client, Good Days Limited, a shopping mall in the year ended 31st December 2016 shows the following. So you have 2016 here and 2015. So 84.4, sorry, 575, 83, 446. All right. Then in December, management announced, wait, this is interesting. In December, management announced plans to stop the sale of ladies wear from the end of the month. Management announced plans. These sales amounted to 1.4 for the year ended 2016. And this is it. A provision of 0.5 has been made in it's interesting because we were talking about redundancy, right? Employees who are mainly the sales girls. Required comment on materiality of these two plans. Then this question gave you the materiality levels. Please, you won't get it like that these days. So you are supposed to know this thing by heart. Nobody will give it to you these days. So if it were last week, you will be calculating the evidence, right? The materiality. So you will calculate it. And I think by now you should know how to calculate it. Anyway, this is a November 2017 paper. So you can download the paper and work on it. All right. But if you have the book, it's at page 209. Then B. Central to a number of government investigations in the various countries have been in the various countries. Central to a number of government investigations in various countries. This is a wrong brofo, CFA. Have been companies trading with organizations or individuals other than at arm's length. Such transactions were made possible by a degree of control of influence exercised by directors over both parties. Directors are responsible for identification of such related party relationship and transactions. However, the auditors has a responsibility of ensuring good reporting in that area. You are the audit senior of an audit firm preparing to audit a group of company with its subsidiaries and sub-subsidiaries, which also trade with the companies owned by the same directors of a parent company. What audit procedure and evidence, all right, should the auditor consider to discharge his responsibility in terms of related parties? Now, you see, these are the reasons why I have treated all the standards in your book to also talk about how you get evidence for some of these things. You can confirm that I have treated like about 30-something standards in your audit book and how getting evidence in that area is also concerned when it comes to this, because I know how most of you are doing this thing without doing corporate reporting in addition. So I have actually taken time to do that thing in the book for you. So now, how will you get evidence in terms of auditing a related party transaction? How will you go about it? You see, it looks so. How will you get evidence? And it is 10 marks. So it has a 1 chorokra 5 points. 1 chorokra 5. What does the audit standard of what is the audit standard on related party transaction? Who knows? The IAS is IAS what?
24.
IAS 24. What does IAS 24 say?
Okay.
What does it say?
There must be disclosure.
Good. And no, there must be disclosure. So when we say how will you get evidence on that? What will you demand? What will you take for you to be able to be convinced that they are trading where? What will you get to be convinced or to assert the fact that there were related party transactions or there were no related party transactions?
You need information about.
Your line is breaking. Can you come again? Hello? Oh, who was talking? Hello?
It must be disclosed in the financial statement.
You are getting evidence. So if you write answer like it must be disclosed in the financial statement, you've not answered the question. No. I've told you that you need 3 things that must happen in every sentence. That please don't. Let me advise you, don't do anything contrary to that. If you want to pass, don't do that. Don't try it.
The 3 key elements should be there.
Yeah, in every sentence that you write, the 3 things must be there. Please, we have taught you, don't just go and do anything you want to. I beg you. Whatever statement you are writing, there has to be a how, there has to be a what, there has to be a why. If you don't do it like that, after all that we've said, you are just punishing yourself. So we know that it must be disclosed. Do you remember I gave you 3 things? I said if it is a P&L item, I said if it is a SOFPL, and I said if it is what? A disclosure item. What did I say there? What are the things there?
Occurrence. Completeness. Value and understandability.
Yeah. So see, if you decide to neglect those things, you are punishing your own self. IAS 24 is a disclosure item. So those are the whys. So whatever you are going to, okay, you know what? Let me give you some few minutes, like 5 minutes, to think through it. Let's continue. Sewa says that, hey, where is it? The auditor could make enquiries from management representatives to understand the relationship disclosed. I think what you want to say is to get better understanding of the relationship, right? So that's correct. At least all the 3 things are reflected. Is it Adelaide or Sewa? Who sent that? I think it's Adelaide or being right.
It's Adelaide.
Yes, please.
Yeah, it's Adelaide. All right, so that's fine. So related party transactions, yes. So again, you see, you have to get their disclosure note. So, like she has said, one thing you need to understand: how do you know? How do you even know that they are related parties? You need to know the degree of control. Like it says, such transactions were made possible by the degree of controls and influence. You need to get the ownership structures of these companies to be able to even testify that they are related parties. All right. So get the registration document or the ownership document of both parties. So that is document. You are inquiring for the document. All right. Or you can inspect the document to get a better understanding of the related party that they have. So how are they a related party? So you can get the document to understand their related party. So that one will help you understand. Then when it comes to every transaction that they do, that one too, you will need to check. So in fact, if you have been able to identify the what do we call it, the establish that there is a related party, then it means that in the accounting records too, it must be correctly treated at arm's length. So what do you do in the accounting books? You have to check the treatment of that related party in the accounting books. Now, why are you doing that? To ensure accuracy. To ensure accuracy. So, the value. Do you know that according to IAS 24, when you record it, you must disclose the actual arm's length transaction. see, that thing there, I get worried, Kakra, because the way you people are doing this audit without doing the reporting standards, and me read this part, I get worried, Kakra. The people who are doing corporate reporting and financial report will always have an advantage. And you see, I don't know how I can't use this platform to be teaching you corporate reporting. It's not possible. It can't even work. It can't work. So it means that I just saw in the examiner's report that the knowledge of the standards are very low in the audit paper. The knowledge of the standards. If you read, I think the S&D, this thing is pasted. Steve has pasted that thing, and it's there. Let me read that thing to you, okay, so that you beware. He said that, number one, students have a weakness in the ability to relate answers to relevant information in the scenario. So people write things that are not in the question. Application of relevant standards to answers is also a problem. A good number of students over-elaborated on answers without considering the marks allocated to the question. Majority of the candidates did not present their answers in an orderly manner. Some students did not have questions and sub-question numbers. They didn't write it. Answers were without paragraph, virtually presenting answers like the way police reports are written. So you see, your organization matter, but these things I teach it at the latter end of the course. But anyway, so let's focus on what we are doing. So you see, your knowledge in the standards matter. I get worried, and I don't know how to go about it, and I don't know who advise students to how they pick the papers they want to write. I don't know who advised them, because there is no way you can do audit. If you are doing audit, you have to do corporate reporting. But some people will say I'm doing audit and tax. I am in TSA. But it doesn't mean your life is ended. It just means that already your exams will be marked over 90%. Instead of 100%, 80%. It's 80%. Instead of 100%, you have already done, yours is 80%. But you can make it 90% by understanding how to answer evidence question. So I think what I can do is to probably end it here and use next week for that. Yeah, that is the best thing I can do. Because last week, I think I started with some of the standards. I taught you some of the standards. I taught you like PPE, right? What were the standards I taught you? Guys, last 2 weeks, what were the standards we did? And I know someone Kai.
Yes, PPE.
We did PPE,
Yes.
Please, I think we need to learn these 3 standards for audit. These are the important standards. So IAS 8, 10, 24, and 37. So please, let's do these standards next week, because but you see, you don't need to wait for us to do this thing. If you bought the audit book, you don't need to wait. You don't. In fact, I think I have done. I have done the thing on all the standards for you. About 30-something standards. You don't need to wait. You see, IAS 38 is here. IAS 38. So the accounting issues that the examiner will bring in the question. Then the audit work. So what you will do as an auditor, analyze this, compare this, do this. I've done all of them. IAS 40. You don't need to wait. 41. IFRS 2. Everything is there. How many standards? 27, 28, 29, 30, 31. You see, I have done 31 good standards. You don't need to wait for me. That is why you bought it. You really don't need to wait. So, like, disclosure of future lease payments should be verified as accurate. So this is it. I mean, these things we are talking about, these are the things. So these are the things. So if you have it, don't close the book and put it there and no. You are punishing yourself. You are just punishing yourself. Just taking a look. I think reading, like, it will be just like 10 pages BP. So don't wait. Don't wait. I beg you. Let me just go to IAS 24 and see. So you see your questions. IAS 24. And so audit now you. So related party transaction. I tell you the accounting is. So these related party transactions are disclosure issues, but may also be an indication of fraud. So any material transaction between companies must be disclosed in the notes of the financial statement. So that is me explaining it to you, telling you these are the things. You know that there is a problem. So and you see here, the auditor has two problems: knowing who are the related parties of the client. Didn't we talk about that? That I said that you need to get the ownership structure of the companies. So you inspect those things. All right. Those are the things that you check to get. Then being able to spot transactions that have appearances that suggest that there might be related parties. So to try to identify who related parties are, inspect what? The shareholders register. So you say inspect shareholders register to what? Understand, or all right, you can use the word understand the related party. You can inspect board minutes for evidence of directors raising related party transaction issue. You can inspect prior year related party disclosures. So these things, then I said to identify potential related, bear in mind that if two parties are in the transactions are connected, there may be result of transaction not being on commercial terms. So look out for transactions that are at number one, at a price rather than what? The market price. So these are the things you are looking out for at an odd time. So again, the transactions that are at all times between two companies that have no obvious reasons to do business. So if you look out for these things, these are your way out. So and please, these, they are all in the books for you. Don't wait. If it is very difficult to ensure related party transactions has been disclosed, ask the auditors rely heavily on the board to tell them about the related parties. So in addition to the above work, the auditor will typically obtain what? Management representation to confirm that the board believes that all related party transactions are disclosed. So this is it, completeness. Complete related party disclosure. So these are, so you see, if you go through this part of the manual, it tells you everything you need. All the standards are done there. So if you don't do corporate reporting and you have bought the book, why not read that aspect too? Please do that. They are all there. Foreign exchange, everything, all of them are there. This IAS 8, this IAS 10, this IAS 24, this IAS 37 I'm talking about, the same thing I'm going to use. So why not do it before we meet? Why not learn that aspect? If you know, parents say you are not even doing corporate reporting or FR, why not do it? So please, that is my advice for you. So because I want the best students to come from my class. So I'm going to take the time to do that, which means that there are certain times in this class, one higher upon 11 o'clock. This one, it's 9:30. I've seen that some of you have even left already. And we need to take in pepper. So we will do that. But anyway, What you've taken today is that you know that to be able to answer an audit question, you need 3 things, right? In one statement, evidence question. You need the how. And please, what is the acronym for the how? This one I'm going to pick and call some people. Charles, what is the acronym for the how? Let me assume that Charles is asleep. Perez.
Hello.
AEIOU.
Hello.
You see, Charles is saying coca. Okay, oh, no problem, Sha. Then
I'm not the one who said.
Who is that? Who was that saying coca when I was asking how? All right. Then what are the sources? What is the acronym for the source?
DADA.
Dada Gobe.
All right.
Dada 3.
Okay. So that is that. Then what about the assertions? The reason. The reason. What about the assertion?
So that's why we have the Coca, Cova, and then the others.
What are the others? What are the others?
Disclosure.
I take it that because you are doing it for the first time, maybe you won't grab it. So I expect you to go over, okay? I expect you to take time and go over. So we have the Coca Cove and the Cove. All right.
Yeah.
So I expect you to take time and understand what each of them is. All right. Completeness is doing everything, making sure everything is present. Occurrence means the thing actually, what is actually recorded actually occurred. Classification means that they are recorded in their right position. That what is supposed to be debited is debited. What is supposed to be credited is credited. All right, the right class of account. Cutoff means that you have recorded a thing at the right date. Accuracy means that you have recorded the right amount. So these are P&L. Then if you take an SOSP item, you have to also check completeness. Everything is recorded. If they say they have a building, you know, you have to check the ownership of the building. You don't just have to check the existence, right? So if you have a building, if you are auditing a balance sheet item, is the value correct? And the values come from the standard IAS this, IAS that. If it is PPE, what does PPE say? Existence, is it really existing? Do you have ownership such that you have recorded it in your books as an asset? You have the right. You have the obligation for recording a liability. All right, it's everything completely recorded. So that is the reason. Completeness, occurrence, value, the same thing, understandability. Yes, Adelaide, your hand is up.
Yes, sir. Please, the cutoff. I thought you said it's whether the thing is recorded at the wrong date rather, but I heard you say the right date, so I'm confused.
Oh,
when you're explaining, yeah.
It's the same thing now. So the thing is that you should be recording the thing at the right date. So if you have recorded it at the wrong date, that is the issue. So an abnormal circumstance, like this one, for example, the double entry should be correct. So if you don't record it correctly, then that is the issue. This one means record it using the right date. If you don't use the right date, then that is the issue. All right. Please, are you getting it?
Yes, please.
So I'm not saying record the thing at the wrong date.
Okay.
You should use the right date. So if it is the wrong date, then that is the issue. All right. Okay. That is the problem. All right. Okay. So basically, that is that. And so at least what I want you to take out from this class today, and let's put the practicals probably to our next meeting. And so we learned evidence. This is what we did today. We learned evidence. audit evidence. We learned the audit evidence. And these are what we understood. Our evidence is information, but you will need sufficient appropriate evidence. Sufficiency talks about quantity. Appropriateness talks about the quality in terms of relevance and reliability. And so these are the things we discussed under there. We took this example to actually, and this was the key underlining, that we will need a written evidence, not an oral evidence. And we learned here how to get the evidence. So we said you need three things. How? The how is the vowels, A, E, I, O, U, and we explain the things there. Inspection is viewing the thing, right? When we say you are inspecting the thing, you are using your eyes to view, right? Then observation. What is the meaning of observation? That one too is take the form of viewing, right?
You are looking on.
Yes. So you are looking.
Yes.
You are looking. All right. So that is it. Recalculation, you are doing the mathematics. Okay, so that is how it is. So we explained these things. And we said the analytical procedure is comparatives, and it is used in the various stages of an audit. Planning for risk identification, substantive for evidence gathering, final for conclusion. We also talked about inquiry, and we learned the positive confirmation, negative confirmation, and using the work of an expert and using the work of the internal auditor, and even outsourcing. Then we came back to talk about the sources of evidence, Dada Gobe. So we talk about documents, the asset verified, the directors. So you take written, you see, the related party thing we talked about. You see, I mentioned in the book that you need management representation. You can also inspect previous years to see how the companies are related. It's the same thing. You can also inquire. All right. So you inquire from directors, that is management representation. So you don't have to really say inquire from directors. You can say that if you want, but you can also say seek. Seek means what? Inquiry. So seek management representation. All right, to understand their related party. Then the value, you see, the value should be at arm's length. All transactions must be arm's length. So if they didn't do it at arm's length, that one too gives you a signal of what? A related party transaction. So each document, each transaction that has happened, what do you need to do? It's a transaction, and if it is a transaction, if it is an invoice, you will need the invoice. And if you are also checking how it is recorded in the accounting book, so inspect the ledger. So if you inspect the ledger to what? Confirm the value, whether it was reported as an arm's length. But whatever way you will phrase it, the three things must happen. Whatever way you will phrase it, all the three things must happen. And so please be careful. That is me, your takeaway. That is what it should be from today, because next week we will practice it. And please, my last advice for you before I say goodbye for today is that if you have bought the book, let the book witness that you bought it.